If someone told you this bond lives on the blockchain now, would you feel smarter or slightly uncomfortable? Because here's the truth, tokenized bonds are not a scam, but they're also not as simple as Twitter threads make them sound. And if you're thinking of investing in one, there's one thing you should understand first, not to scare you, but to save you from being confidently wrong. Let's break this down properly. Tokenized bonds are real bonds, government bonds or corporate bonds, nothing imaginary here. The only difference is how ownership is recorded. Traditionally, your bond ownership is tracked by banks, custodians, and centralized systems. With tokenized bonds, ownership is represented as a digital token on a blockchain managed by smart contracts. This brings clear benefits: faster settlement, fractional ownership, global access, lower operational costs. So far, so good. But here's where things get interesting. With traditional bonds, ownership is boring, and boring is good. The legal system, regulators, and courts all agree on one thing: you own what you own. With tokenized bonds, ownership exists in two worlds at the same time. One world is the blockchain, the other world is the legal system. If both agree, everything works smoothly. If they disagree, the legal system wins, not the blockchain. And here's the part nobody likes to talk about. In many countries, laws are still catching up to blockchain-based ownership. Not because regulators are slow, but because changing financial law is like changing the engine of a plane while it's flying. This doesn't matter on good days, it only matters on very bad days. Now let's talk about custody, because this is where most people stop paying attention. In traditional finance, custody is handled by regulated institutions. There are rules, backups, and clear procedures. With tokenized bonds, custody can mean different things. It might be a platform, it might be a smart contract, it might be a digital wallet. If something unusual happens, a platform pause, a regulatory check, or a technical issue, your bond doesn't vanish, but your access to it can be delayed. Think of it like having money in the bank during a system upgrade. Your money is still there, you just can't touch it for a while. Not scary, but important to understand. Now, quick reality check. Regulators are not trying to kill tokenized bonds. If anything, they're testing them quietly. Their real concern is responsibility. Who is accountable if something breaks? Which country's law applies to a global token? How are investors protected? Until those answers are standardized, tokenized bonds are in what we call a transition phase. And no, transition phase does not mean bad investment. It means investment that requires awareness. Now let's talk about liquidity, because this one is subtle. Tokenized bonds often promise better liquidity, and technically, trading is easier. But liquidity doesn't come from technology, it comes from people willing to buy and sell. If institutions hesitate, if platforms are fragmented, or if standards differ, liquidity can behave very differently than expected. In traditional markets, central banks act as a safety net. In tokenized markets, that safety net is still being designed. Again, not a red flag, just a reality check. So who are tokenized bonds actually for right now? They're great for institutions testing infrastructure. They make sense for long-term investors who understand the structure. And they reward people who ask boring questions before investing money. Questions like, who issued this bond? Which law governs it? And how custody is handled? If you're asking those questions, congratulations, you're already thinking like an investor, not a gambler. And here's the bigger picture. Tokenization is not going away. Bond markets will evolve. Settlement will get faster, access will expand globally. But the biggest advantage won't go to the loudest hype chasers. It will go to the calm, informed participants who understand both the upside and the structure. Tokenized bonds are not a trap. They're not magic either. They're a powerful tool, still being refined. And if you're watching this before investing, you're already ahead of most people in the market. If this video helped you think more clearly, hit like. It tells YouTube this content is worth showing to smart investors like you. And if you want more finance explained without noise, hype, or fear, subscribe to the channel. We don't rush trends here. We understand them. See you in the next one.